Most people think credit cards and debit cards are basically the same thing. They're both plastic rectangles that let you buy stuff without cash, right? Here's a shocking truth. Last year, banks made over $100 billion in credit card fees, mostly from people who thought they were playing it safe. These two pieces of plastic work in completely different ways, and understanding the difference could save you thousands of dollars or cost you thousands, depending on how you use them. Both cards can help you or hurt you. It all depends on how you use them and whether you understand what you're actually doing. So what's a debit card actually doing? A debit card is connected directly to your checking or savings account. When you swipe it, the money comes straight out of your account immediately. Think of it like a digital version of cash. If you have $500 in your checking account and you buy something for $100, you now have $400 in your account. Simple. You can only spend money you actually have. If there's no money in your account, the transaction gets declined. Unless you have overdraft protection, which is a whole different nightmare we'll talk about later, debit cards are perfect for ATM withdrawals. You're just accessing money that's already yours. Most banks don't charge fees for using your own bank's ATMs, and even if they do, the fees are usually minimal. The key thing to understand, with a debit card, you're spending your own money. What about credit cards? Credit cards work completely differently. When you use a credit card, you're not spending your money. You're borrowing the bank's money. Every time you swipe a credit card, you're taking out a tiny loan that you promise to pay back later. The credit card company pays the merchant, and now you owe the credit card company. Credit cards have their own spending limit that's separate from any bank account you have. If your credit limit is $5,000, you can spend up to $5,000 even if you have $0 in your bank account. This is where people get into trouble. It's easy to forget you're borrowing money when it feels like you're just swiping a card. But here's where it gets interesting. If you understand how credit cards work, they can actually make you money instead of costing you money. The brutal truth about costs. Here's where most people get destroyed by not understanding the difference. Let's say Jake has a debit card and Mike has a credit card. Both need to withdraw $200 from an ATM. Jake, debit card, pays maybe $2 to $3 in ATM fees if he uses a different bank's ATM. That's it. Mike, credit card, gets absolutely slaughtered. Cash advances on credit cards typically charge 3 to 5% cash advance fee, $6 to $10 on $200, 25 to 30% annual interest rate that starts immediately, no grace period. Often a separate cash advance APR that's higher than purchase APR. Mike just paid $10 plus in fees plus immediate interest charges for accessing $200. Jake paid $3 maximum. The lesson: never ever use a credit card for cash advances unless it's a true emergency. But the story flips when it comes to purchases, where credit cards actually win. Here's what the debit card companies don't want you to know. Credit cards offer way better protection and benefits for purchases. Fraud protection. If someone steals your debit card info and drains your account, that's your actual money that's gone while you fight to get it back. You might be without that money for weeks while the bank investigates. If someone steals your credit card info, it's the bank's money that's gone, not yours. You dispute the charges and don't pay the bill while they investigate. Your actual money stays in your account. Purchase protection. Many credit cards offer warranties, purchase protection, and dispute resolution for defective products. If you buy something that breaks or doesn't work, credit card companies will often refund your money even when the merchant won't. Debit cards, good luck getting that protection. Rewards and cash back. Credit cards often offer 1 to 5% cash back on purchases. If you're responsible with credit, you literally get paid to spend money you were going to spend anyway. Debit cards typically offer 0 rewards, so which one should you actually use? The answer depends entirely on your relationship with money. Use debit cards if you struggle with overspending. You have existing credit card debt. You want to stick to a strict budget. You're just starting to learn money management. With a debit card, you literally cannot spend money you don't have. This forces you to live within your means. Use credit cards if you can pay the full balance every month without fail. You want fraud protection and purchase benefits. You're building credit history. You want cash back rewards. But here's the critical part. If you carry a balance and pay interest, credit cards will destroy your wealth faster than any rewards can build it. The biggest mistakes people make. Mistake number 1, using debit cards everywhere because I don't want debt. While being debt-free is smart, you're giving up valuable protection and rewards. If you can control your spending, credit cards used responsibly are actually safer and more profitable than debit cards. Mistake number 2, using credit cards like debit cards. Some people get a credit card and immediately start withdrawing cash or spending without tracking their balance. This is how you end up in credit card debt, paying 25% interest. Mistake number 3, not understanding overdraft fees. Banks love to offer overdraft protection on debit cards. This sounds helpful, but it's actually a trap. Instead of declining transactions when you don't have money, the bank will kindly cover the purchase and charge you $35 plus per transaction. I've seen people pay $150 in overdraft fees for buying a $4 coffee. The bank covers the coffee and charges $35, then you buy lunch for $12 and get charged another $35 and so on. Turn off overdraft protection. Let the transaction decline instead of paying ridiculous fees. Mistake number 4, not monitoring accounts regularly. Whether you use credit or debit cards, you need to check your accounts regularly. Fraud happens, mistakes happen, and catching them early saves you money and hassle. Mistake number 5, choosing based on fear instead of facts. Some people avoid credit cards entirely because they're scared of debt. But if you're going to spend the money anyway, using credit responsibly gives you better protection and rewards. Others get credit cards and immediately max them out because it's not my money. Both approaches are wrong. The smart strategy. Here's what actually works. Get both cards, but use them strategically. Use credit cards for all regular purchases, groceries, gas, bills, online shopping, travel and hotels, anything where you want fraud protection. Pay the full balance every month. Never carry a balance, ever. Use debit cards for ATM withdrawals, situations where you want to limit spending, places that charge extra fees for credit cards. When you're learning to manage money, set up automatic payments so your credit card balance gets paid in full every month from your checking account. This way, you get all the benefits of credit cards without the risk of forgetting to pay and getting hit with interest charges. The credit card industry's dirty secret. Here's what they don't want you to know. Credit card companies make most of their money from people who carry balances and pay interest. The rewards, cashback, and benefits, those are funded by people paying 25% interest on their balances. You want to be the person getting the rewards, not the person funding them. Banks make about $100 billion per year in credit card interest and fees. Most of that comes from people who don't understand how credit cards actually work. When you use credit cards responsibly and pay them off every month, you're essentially getting paid to spend money while someone else subsidizes your rewards. What this actually means for you. Here's the bottom line. Debit keeps you in check. Credit, when used wisely, pays you, but misused, it wrecks you. Stop thinking about credit cards and debit cards as good or bad. They're tools, and like any tool, they can help you or hurt you depending on how you use them. The goal isn't to avoid credit cards out of fear or to use them recklessly. The goal is to understand how each one works and use them strategically to protect and grow your money. If you're disciplined with money, use credit cards for everything, pay them off monthly, and collect rewards while building credit history. If you struggle with spending, start with debit cards, get your finances under control, then gradually introduce credit cards when you've proven you can handle them. Most importantly, never use either card as an excuse to spend money you don't have or can't afford to lose. The real winners are people who understand both tools and use them appropriately. Everyone else is just making banks rich while staying broke themselves. Your choice. Be strategic about how you spend money, or let the banks profit from your confusion.